So, finally got your VAT registration. You have got that 15-digit TRN and you are feeling good, right? But here is the cold truth. Getting registered is the easy part. The real risk and the real work starts after. In this video, I am breaking down the 5 things that you actually need to do right now after getting your registration. And stick around for point 5 because it is the most invisible mistake that triggers FTA audits. Hi, this is Razia from Entrust Auditors. So let's talk about first point. Display your TRN and issue proper VAT compliant tax invoices. First thing first, your TRN must appear on every business documents. Think of it as your tax identity. From the moment you receive your tax registration number, that TRN must appear on your tax invoices, tax credit notes, every documents and contracts. Issuing an invoice without TRN is the direct violation of UAE VAT regulations, and it is the easiest way to get it flagged. Under VAT law, every business must issue a VAT compliant tax invoice. A valid tax invoice must include supplier name, supplier address, TRN, date of issue, date of invoice, unique invoice number sequentially, description of the goods, VAT amount, price, unit, everything should be included. And you must remember that VAT amount must be inclusive of price if it is B2C. Second point is revenue mismatch. Now let's talk about the mistake that finance managers keep at night. That is, your revenue must be matched with your trial balance and income statement. When an auditor looks at your books, the very first thing they do is they will compare your trial balance and income statement with your VAT return. If your financials show earn more than you reported, it is the direct red flag. Why does this happen? It is mainly because you might have exempt supplies, out of scope supplies, or any timing differences that your accounting software may be reported your sales in your later period. So, what you want to do? You must match and reconcile your VAT return. And third important point is deadlines and record keeping. After VAT registration, you must file your VAT return within 28 days from the end of the tax period. And you must remember that the payment also be done within that due date. Most businesses file quarterly VAT returns and some businesses file monthly VAT return. Always check your tax period in your portal. Missing the deadline may lead to administrative penalties. Another important point you must take care of that you must keep your records at least 5 years. These records include purchase invoices, sales invoices, credit notes, your financials, VAT return calculations, etc. These records are very important if the FTA conducts tax audit. Without proper documentation, you may face penalties. Fourth point is input tax credit. You can claim your input tax on legitimate business expenses. Some expenses will not allow FTA to claim, like entertainment expenses. Those expenses for client dinners and corporate events will not allow to claim. And another one is personal vehicles. Personal vehicles are not allowed unless it is a commercial vehicle solely for business purposes are only allowed. Now let's move to point number 5, the invisible tax, reverse charge mechanism and designated zone supplies. If your services are outside the UAE, your foreign suppliers won't charge VAT. So guess what? You have to account for that VAT. So reverse charge mechanism means you are essentially accounting for VAT in the UAE. This is called reverse charge mechanism. You are essentially self-assessing the VAT on imported services and declaring in your VAT return. And another important supplies are designated zone suppliers. Goods moving between designated zones to designated zones are out of the scope of supplies. And you must remember that it is only for goods supplies, not for services. Let's recap. After your VAT registration, here are these 5 non-negotiables. First, display your TRN and issue proper VAT compliant tax invoices. Second one, your revenue must be matched with your income statement. Third, file on time, pay on time, and keep your records at least 5 to 7 years. Fourth, claim your input tax correctly. Fifth, Record the reverse charge mechanism correctly. VAT compliant isn't being a tax genius. It's about being a tax consistent. So get these foundations correctly. If this video helped you, hit that like button. Follow for more useful videos. And which is the most confusing part you find? Drop a comment below. We do have a business and accountants community. Link is in the description. You can join. Stay ahead, stay compliant, and stay healthy. Thank you for watching.